Okay, come on then, guys. Hate to disrupt your wonderful conversation in this room. It astounds me what you guys manage to talk about. But for the rest of us human beings, let's have a think and a little look at ECB and what we're expecting, what happened last month, and how we can actually trade this and profit. So if anyone's got any questions along the way, please feel free to ask me. Now, let's have a look at last month's statement. I'm going to drag it off of my website, which is probably quite confusing. Okay, so this is a statement from last month. 2nd of June 2016, and he started the meeting saying, based on the regular economic and monetary analysis, they kept the key ECB interest rates unchanged. They expect them to remain at present or lower levels for an extended period of time. And regarding non-standard monetary policy measures, we confirm that the monthly asset purchases of 80 billion are intended to run until the end of March 2017 or beyond if necessary, and in any case until the Governing Council sees a sustained adjustment in the path of inflation consistent with its inflation aim. As a further step, on June the 8th they will start making purchases under the Corporate Sector Purchase Programme, that's the CSPP, as opposed to the PSPP, which is the Public Sector Purchase Programme. And on the 22nd of June they will conduct the first operation in their new series of targeted LTROs. The comprehensive package of decisions taken in early March underpins the momentum of the euro area's recovery and fosters the return of inflation to levels below but close to 2%. In particular, the measures continue to ease the cost of credit and continue to contribute to a strengthening in credit creation. The economic recovery is gradually proceeding. Additional stimulus beyond the impetus already taken into account is expected from the monetary policy measures still to be implemented and will contribute to further rebalancing the risks to the outlook for growth and inflation. In the current context, it is crucial to ensure that the very low inflation environment does not become entrenched in second round effects. The Governing Council will closely monitor the evolution of the outlook for price stability and, if warranted to achieve its objective, will act by using all the instruments available. So this was a reasonably dovish tone. He mentioned a few things in there that you want to be keeping an eye out for. I can't imagine that there's likely to be any change today. But these first two paragraphs, this dovish tone, you want to be paying attention to. So when talking about the policy measures, he says beyond if necessary, and in any case until the Governing Council sees a sustained adjustment in the path of inflation. So that is a very dovish statement saying that these asset purchases at the minute are destined and continued to carry on running until inflation perks up. There was an extra set of purchase programs that they started to conduct throughout the course of June, and he's saying that he sees this package that he's putting together is helping and aiding to get recovery on track, get inflation higher. He states that he particularly sees it to ease the cost of credit, and he's saying that it's gradually proceeding. However, the dovish tone still carries on because he's saying that additional stimulus is expected from the monetary policy measures still to be implemented and will contribute further. It's still saying it's crucial to ensure inflation does not become entrenched and that they will, if warranted, act by using all instruments available within its mandate. So this was a particularly dovish statement from Mr. Draghi, as we have become known to expect, and you know, we do very often see this sort of dovishness creep in. And what happened was, on this day, this was your Bund market profile. So we had a pretty quiet ECB, all things considered. We opened at 163.09, and by the end of the day we were half a point higher. We had pretty much a double distribution day in terms of TPO, but it was a non-action meeting, so it was a little bit contained, a little bit more peaceful, a little bit quieter. There wasn't a great deal within that sort of conference that really set anything alight. In terms of a little bit more detail, we'll scroll back through the 5-minute, and you can see again, in terms of that dovishness, this is your press conference around here. It was just a very gradual trend, just eking higher, no fireworks, no major swings in terms of, you know, what the Bund was actually doing over the course of the press conference. You know, for that hour or so, just a gradual move higher. So not one of the big ones, and that's how we sat in the Bunds. Now, in terms of our Euro stocks, we'll do the same thing, and you will see that dovishness. Where am I? Okay, so we are in here. This is the date that we're looking at. That dovishness again over the course of the ECB squeezed through, and you can see that really and truthfully just not a lot particularly happening. When we got to half one, maybe a slight bit of disappointment that there wasn't anything happening, but thereafter it wanged around a bit and they sort of repriced a bit higher, were comfortable in the fact that although there hadn't been a move and we had an initial sell-off, because there wasn't a move, you really are talking, you know, a maximum of 10 ticks on that, and it was fairly comfortably recovered and was pretty much not a lot more than a very boring range day. In terms of the euro, well worth having a look as well at what the euro did over this. Okay, let me just go back a few more days. It is fairly quick, so don't worry. Euro on the 2nd of June did this. So this was an aggressive one. This was a bit nasty as the market tried to interpret what was going on and what was happening. You know, we had the initial move down based on that slightly dovish tone. We then had quite an aggressive spike up because nothing had actually happened, but eventually the market interpreted it as still dovish and still looking for something to come out and something to happen. So of course we ended up dropping further back down the page, but actually the euro got itself a bit confused. The bonds didn't. The bonds just stayed up there. The euro stocks didn't care. The euro eventually got it right, but it did take a little bit of time. You know, there was that initial he's dovish, followed by but he hasn't done anything, therefore we'll go up, followed by well actually he is dovish and we expect something is likely to happen in the future courses. Now moving forward then to today, what do we expect? What can we foresee might happen? Well, initially, absolutely no change in policy is expected. We are not expecting this to be a go-live meeting. We're expecting this to be a bit of a holding pattern. Obviously, there's nothing in terms of an ECB meeting in August. The next time we're going to get to see the ECB is in September. And September is when the staff projections come out. And he has already hinted that he's likely to wait until then and do something come September when they get the quarterly staff projections. So there are no staff projections today, and there is no meeting in August. Now, he has already stated, and there have been other people, ECB's Lind came out and said that they were unlikely to provide an estimate of the impact of the Brexit vote and of the current policy measures that they've got in place until September at the earliest. So, we have got other things going on next week. You've got the Fed, you've got the Bank of Japan. The ECB do not seem to be under any pressure to do anything at this meeting and have indicated already that it is unlikely to happen. Therefore, I think you can still expect him to be dovish. You still want to expect him to hint that September is their go live meeting, and if he does that, that might just be enough to get the Eurostoxx higher, and sort of get a bit of hopium into the market. But the reality is that in terms of actual events and actually something to happen, we are not expecting it at all at the minute. There have been some downside risks that he may allude to. Obviously, we saw ZEW on Tuesday. That came in negative, and there have been ratings agencies that have been dropping their GDP forecasts over the last few weeks since Brexit. But still, I don't think there's going to be any form of panic. There's no need for any form of panic, and I think that although it will be hinted at, it certainly won't be something that he's going to get particularly committed to in terms of actually sort of doing anything or penning himself into a corner. So really looking for that dovish tone to carry on. Mention the downside risks, mention, as we saw in that first paragraph, the flexibility of the policy tools that they do have, and sort of edge us towards an outcome in September. Now, if that is the outset and that is what happens, I think that the same is likely to sort of play out in terms of certainly the Eurostoxx. I think that there might be a little bit of momentum slip out of the market, and you might see just a slight drop in price in the Eurostoxx, just because there's this expectation of, this hopium that maybe he will do something today. But obviously it's not going to last too long. I think the majority of people do expect nothing to happen today, and I think that that's relatively priced in. Now, of course, there are options that the ECB may have, and there is certainly something that will get challenged in terms of and will get mentioned probably within the first few questions, because on the 30th of June we got something coming out saying that the ECB are looking at moving away from the capital key. Now, it would indicate that they're likely to head towards maybe a debt ratio, but there have been rumours and there have been mumblings that the ECB, the assets that they can purchase have been depleted so much that they might have to move away from the capital key, because obviously a lot of things are being bought up, and a lot of things are being bought in the bunds. Now, when we got this story on the 30th of June, this is what happened. At the slightest hint of moving away from the capital key, this is what the bunds did. So it opened this price bar, and this was at month end, at 167.24. We dropped down on a first swing to 166.29. So although it doesn't look a lot there, this is a point that we dropped down. We then had a bit of a recovery. Then we dropped again. By the end of the day, the Bund was trading at its worst point, 165.51. So that is a 2-point drop that the Bund had on the slightest suggestion, going back 3 weeks ago, that they may move away from the capital key. This will be asked as a question. I don't think this is very likely to be entered into the mainframe of Mr. Draghi's text and Mr. Draghi's speech, but I would expect this, if any of the journalists there have got any sense whatsoever, this should be at least, given the benefit of the doubt, within the first 2 questions. Okay, so it really should get mentioned and get looked at, and the answer to this is going to move the Bund. It is going to move the Bund one way or another, dependent on what is said. Now, when this was said on the 30th of June, the Euro stocks reacted by doing this. So this is the 30th of June. We had priced ourselves into month end, and when that story came out, we started moving up aggressively, and that is what should happen. Okay, we should get moves up in the Euro stocks. We should probably get moves up in the Euro, because it's a very positive sign, and you will see that some steam come out of the Bund. A move like this would really push the recovery forward in many people's minds. Germany do not need their bonds to be bought up, right, left and centre. So this is really going to support the peripheries. It's going to be very supportive to, places like Italy, where their banks are in an absolute mess. And that's also something he's likely to get quizzed on today. This would be a very, supportive move for the Euro stocks. So keep a close eye for that. It's not likely to come out. It's not likely to actually be a measure today. But the hint that it could be a measure was enough last time. So coming from the head of the ECB, it's going to be particularly significant. Now, the other moves that they could hint at, or they could do, I could be very wrong. They could drop the depot floor. That is something they could do. It's a very easy option, probably not very effective, let's be honest. They could extend the public sector purchase programs to below 2 years and above 31 years. So at the minute, that's where we are. That's the yield pricing. 2 years to 30 years is where they're focusing most of their buying power. They could move that, but in terms of an actual policy change, it's unlikely that he's going to do this. It's easy, but it's not going to achieve anything. Mr. Draghi is normally someone who likes a much higher impact. So he likes something whereby he does 4 or 5 things, all as a grouping, all in one go, to create maximum impact. Just changing the composition in July for no real reason is not a smart political move, and it's unlikely that he's going to head down this route and do a very sort of weak option like this. However, he could again allude to this being part of his plans coming through to September. Unbelievable, isn't it? Every time I'm on this squawk, workmen come in and start prattling around. So it's very unlikely that this is something that he would consider doing in isolation. Were he to allude to this, it would be part of a bigger context, and he would probably head down the route of saying that they are, again, they have flexible policy tools. They do have the flexibility to do this. And don't forget, again, when it comes to the bunds, particularly, any adjustment that he makes to buying below 2 years or above 30 years really does mean that the supply is running out in the bond market, and that they are unlikely to be purchasing many more 10 years and directing it straight at the 10 years. So this would all have a negative impact in the bond market. Now, the other options we have discussed, this change to the capital key. You need to understand at the moment, the way in which they're buying the bonds is done according to a capital key ratio. I think that as it stands from memory, I think the capital key is something like 33% is in German bonds, and the rest of them are filtered down. Now obviously this is slightly less effective in terms of fighting the economic recovery, because quite frankly there's a debate as to whether Germany needs any help in recovering from this. They're carrying the weight of Europe for sure, but as an actual country, are they in as much need as, say, France or Italy or Portugal? Absolutely not. So by changing the capital key, and by doing it, now they could do it as they have mentioned in terms of doing it maybe in debt ratios, or they could just change it. It could be no more purchases in Germany, but weight it throughout the rest of the countries in Europe. This is a major impact for the bond market. Either way, whichever way they do it, the as our friends at Broker Talk have put across here, the plausible is that what can no longer, like a flexible use of it, so what can no longer be purchased in Germany could be split across the remaining countries, according to the remaining capital keys. That's a plausible-ish. Their politically and legally trickier option is to smack straight towards a debt ratio. Whichever way they go, it's not going to be good for bonds. You will see that replicated move where the bonds sold off aggressively, and it should be very supportive to, say, the BTPs and the equity markets. So certainly your Euro stocks should have a massive move up. It'll be interesting to see what happens to the DAX. It should still go up, but of course the DAX is predominantly German, so by dropping them out of the equation in terms of bond purchases might actually be a little bit whippier. Overall you would expect it to go up, but certainly you would expect it to be particularly whippy. The other thing that they could look to do, all sort of revolves around similar things. They could increase the issue limits from 33% to 50% on what they call non-CAC bonds. And when they talk about that, the non-CAC means the ones that are, I'm having a bit of a mind blank here. I wrote this down earlier and I can't see where I've written it, but it's the ones that are sort of, it gives them more purchase room, and can enable them to move into sort of the bonds that might have a better effect on the economy. But these are quite radical options, and on a non-live meeting, which is what we feel we're going into, you wouldn't expect him to be this specific and allude in such specifics to doing these things. In terms of what's priced in, absolutely nothing at all is priced in. 5% chance of a depot cut, at this meeting. Obviously September it starts going up significantly. In terms of some of our banks, Barclays has seen no immediate pressure for the ECB to ease, expecting a dovish tone, and indicating further easing to come in September. Citibank likewise expect the ECB to be dovish and view July's meeting as a bridge to September. JP Morgan actually feel there are some expectations for action. They will remain dovish but non-committal. And and RBS again, expecting no easing action. In terms of who's not voting, it is the Netherlands that are not voting today, and obviously there is nothing in August, and we move on to the September meet. So that's what is expected. Again, just to reiterate, this is not expected to be a go live meeting. This is expected to very much be a holding meeting, a holding pattern, dovish tone to it, no concrete action, but certainly keep your ears open. Any questions to the capital key, it's going to be very tricky for him to navigate the path and to avoid committing to anything, especially seeing as we have had this rumour on the 30th of June. So really focus your attention on that. In terms of the first two paragraphs, I would not expect a lot of change. I would expect that to remain dovish, but again, leaving the talking very, very much about the flexible policy tools that they have in line with September's staff projections. So they are the thoughts I have. Has anyone who's done research had any other thoughts that I haven't covered? This could be from the VTFT or you guys on the floor. Basically that they kind of separate it in terms of when they expect policy to change. So we're normally expecting policy to change around the time that the staff projections come out. So we don't get staff projections on the economy every meeting. They tend to come out every quarter. So what we expect nowadays is the changes in policy, so be it a reduction in interest rates or a furthering of QE or a change to the QE that they're doing, whenever they implement that policy, that's what we call a go live meeting. And we tend to see that, the pattern that they've dropped into, we tend to see that when the staff projections come out. So this meeting, there are no staff projections, and everybody's expecting this to be a non-live meeting in terms of no policy change to have come through, but looking for indications to what they may do in September. Any other questions? Does everyone understand the relationship of what they're looking for? When the important thing to remember with ECB planning and ECB prep is that we're not policy makers. So our job is to work out what happened last time, what did the market do, then to look at the options that the ECB have this time, and then what would the market do with any one of those options. Whether we agree to it or not is irrelevant, but what the market is likely to do. So in this case, you guys are going to be trading the Bund. So do you understand, if they change the capital key, what the Bund is likely to do? If they allude to interest rates, what the Bund is likely to do? We're all happy with that, yeah? Okay, good. Alluding to means giving hints. He's not going to say exactly what he's going to do. So it's he's gonna give subtle hints to it. Any other questions? No? Okay, good. Well, that is the ECB prep then. I hope that all makes sense. If anybody does have any questions that they think of afterwards, please get in touch with me. That's absolutely fine. Don't forget, 12:45 is your initial rate announcement, and then 1:30 or just thereafter, the ECB press conference does start. For those of you that are in the room, just be aware you can get a live webcast of this in terms of watching the whole thing. You can get it on either the ECB website, you can get it on CNBC or Bloomberg or any of those places, but the feed that we get from the office, which will come over the phone speaker, is a live feed and tends to be about 5 to 10 seconds quicker than television or any of the webcasts that you've got. Okay, but keep the webcast on. It's worth knowing what colour tie he's wearing. Red tie normally indicates not a lot is happening. Blue tie indicates dovishness and something may happen. Watch for all of his little quirks. This is what professional traders actually do to get the heads up advantage. So if he comes out wearing a blue tie, you want to immediately start thinking that actually something may be happening today. Alright, I will leave it there. Any questions, as I say, feel free to get in touch or give us a shout if you think of them in a minute. Other than that, I will not be doing the 1 o'clock and I will not be doing the 2 o'clock because it is straight over the presser. So the next time that you hear from me will be tomorrow morning. I wish you the best of luck, but more importantly, trade professionally.